Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordes, and joining me is investment analyst Cristina Parthenido. We'll be discussing the Bank of Japan's upcoming policy meeting and the outlook for the yen. So Cristina, although some of the key central banks around the world are cautiously discussing policy shifts towards tapering and rate hikes, the Bank of Japan has not given any signs that it's ready to make changes to its asset purchase program yet. What can we expect to hear from policymakers when they conclude their meeting this Friday?
Hi, Maria. Well, as usual, we will probably hear nothing new from Bank of Japan this Friday. Actually, the economic situation is different than in other key developed economies. In Japan, first of all, there's no inflation in the country. Some of the inflation measures remain in the negative territory despite the stimulus provided by the central bank and the government. So the scenario of high inflation, which is currently challenging other central banks like the Fed, the European Central Bank, and the Bank of England, and of course several others, can't find any support in Japan for now. Also, the yield curve control on the 10-year bond yield applied by the Bank of Japan has offset the upside pressures coming from the rallying global bond yield. So the bank has no real reason to change its asset purchases in order to balance the bond markets. More importantly, the economy is still struggling with COVID patients, and several important regions are still in a state of emergency following the recent COVID outbreak. Of course, infection cases are currently in a downtrend again, but if we look at the vaccination statistics, only 4% of the population has been vaccinated so far, and that's, of course, a warning sign that the economy is still vulnerable to COVID infections, especially as the Olympic Games are approaching this summer and are scheduled to start in Tokyo at the end of next month. Perhaps the government could remove some restrictions because of that, but probably won't be very generous, and that suggests that GDP growth figures may not be much better than they were in the first quarter, despite the impressive growth in exports. So overall, I think that the bank has no real reason to change its policy settings this week. There are rumors that it could extend its pandemic corporate lending programs for 6 months, but this won't be a big adjustment, and probably it won't cause any reactions in markets.
Okay, turning to the yen now, what reaction can we expect this week? And is there anything we should look out for in the longer term?
Well, as I said before, I don't expect any reaction in markets, and in the yen, of course, the currency is a safe haven asset, and it tends to gain when negative risks are growing in the global economy. But this year, global uncertainty seems to be diminishing. Investors are optimistic that the vaccinations will bring some balance, and global economic growth will rebound more sustainably since reopening plans are moving forward in several countries. So safe havens like the yen could become less attractive in the year ahead, unless, of course, the growing infections of the Indian variant develop into a new drama during the autumn and winter seasons. What is also more important for the yen is how other central banks are setting their own policies. As you have mentioned, several central banks are cautiously trying to prepare markets towards a tightening shift. We have heard several policymakers calling for bond tapering and for rate hikes in the coming years in the US and Europe because of the inflation concerns. But the Bank of Japan has reasonably been very quiet and is not expected to change its policy anytime soon. Perhaps it could be the last to proceed, and that policy divergence with other central banks could be negative for the yen, especially if the Fed decides to send some tightening signals later today. No, technically, for the yen to gain some buying interest in the short term, I think dollar yen needs to correct below the 109 level, and that drop could potentially become more aggressive if the pair also closes below April's low of 107.46.
Cristina, thanks so much. And thanks for joining us at xm.com.